Hello everyone and welcome to Fluent Financial's What You Should Know for the week of March 8th. My name is Mike Lanese and I'm the Portfolio Manager at Fluent Financial. Stocks moved higher this past Friday as U.S. Treasury yields pulled back from earlier highs. All major groups of the S&P 500 finished on the plus side, led by energy, which saw prices that it has not seen since October of 2018. The 10-year Treasury yield, which had popped to 1.62%, after some U.S. job data numbers came in stronger than expected, gave back 6 points to finish at 1.56. The recent spike in yields is spooking markets, but the hardest hit are the tech companies as they're bearing the brunt of that pullback, and the Nasdaq continues to lag the major market averages. For the week, the Dow gained 1.8% thanks to that run late Friday, and the S&P added 0.8% for the week, but the Nasdaq fell 2.1%. Last week also we got the ISM US manufacturing PMI numbers at 60.8, and this indicated the strongest output growth since 2018. To note, the prices paid index also climbed to a decade high, and that indicated rising inflation pressures. So inflation causes what is happening is that the vaccine is being distributed at an increasing pace, and that stimulus-fueled demand surge will come into a supply-constrained economy, and that could lead to higher inflation. But year-to-date, the S&P is up almost 2.3% coming into Monday morning, and our V&O stock portfolio is up slightly over 7.6%. For the week ahead, markets were up early Monday morning. Over the weekend, the Senate passed a $1.9 trillion stimulus bill, and that relief bill contains $1,400 stimulus checks for many Americans, as well as an additional $300 a week for jobless benefits. The measure is expected to pass the democratically held House on Tuesday. J.P. Morgan wrote in a research note that for every $1 trillion of fiscal stimulus, it's going to add $4 to $5 of earnings per share for the S&P 500, and that would imply a 6 to 7% upside in the markets for the remainder of the year. Also, over the weekend, Brent crude prices spiked above $70 a barrel on Sunday evening after the Saudis had a site come under attack by missiles from some Iranian-backed Houthi rebels out of Yemen. The WTI sweet crude, light sweet crude, went over 68 a barrel. And again, that hasn't been seen since October of 2018, but that has now pulled back to more of the $65 level. Economic reports coming out this week. You have the Consumer Price Index report on Wednesday, the JOLTS report, or Job Opening and Labor Turnover Survey report, on Thursday, and the Producer Price Index on Friday. You can look at the CPI as an indicator of a general level of inflation from what consumers must pay for goods, whereas the PPI index is more for the producers and what they can sell items for. Finally, the JOLTS gives us a broader perspective on the positive and negative trends in the U.S. labor market. So keep an eye on that later in the week. For earnings perspective, none of our companies are reporting earnings this week, but there are a couple to note with Stitch Fix, Dick's Sporting Goods, Oracle, and DocuSign. And then Verizon Communications, which we do have a 4% position in our stock portfolio. They're holding a big investor event this week. For an options update, we are 2 weeks through a 4-week cycle, and our stock income has generated around 1.23% of cash from selling 70% of the possible portfolio. When I say we sold 70% of the possible portfolio, if we can sell 10 calls on something and we've sold 7 calls, we sold 70% of the possible calls. 20% of those calls are in the money with the Monday morning run-up, meaning if prices close today, we would be forced to liquidate 20% of our portfolio. The Advantage portfolio has sold 50% of its possible calls and generated 0.78%. As always, thank you for joining us and have a great week.